So we are going live. Now let me just see when we are actually live. And we are live. Hello everyone. Welcome back to our Back to Basics series, where we're taking a couple people who are working with trade ideas but have never traded before and teaching them trading from the absolute beginning all the way up. We have a chat box. It's either beside you or below you. If you have any questions along the way, feel free to click. All of the other videos, we're probably on like number 10 or 11, are on the channel in a playlist. So go to youtube.com/trade ideas and you'll be able to find it there if you're just joining us. And if not, thanks for sticking around. So I said last week that this week we were going to start into the platform, but there's one more quick topic, so this may be a really short one, that I want to cover before we get into it, just the basics, and that's statistical analysis. So essentially we'll go through. Last week we talked about fundamental analysis and we wrapped that up. So far, again, just our progress to date has been what is a stock, down to market mechanics, how exchanges work, how brokers work, bid-ask spreads, all of this, what happens when you click a buy button, essentially. All the way down to technical analysis and fundamental analysis, with technical analysis being our study of our charts, price action, and how that relates to human psychology, and then fundamental analysis being, news and what does the company do? What do they sell? All of these different corporate actions that we went over last week. And again, if you guys have any questions from last week, now's the time to speak up, or we'll go on to this week's topic. Nothing? All right. So we're going to go into statistical analysis. So I just got some long, wordy stuff here from the internet. But I generally don't like to read these things, but I'll leave it up there for our viewers. Basically, it's kind of the third leg to me of this, what we're analyzing to trade, and it really is everything when it boils down to it. It just has a different label. So essentially, when it comes to statistics, it's using a lot of data to try to build a model to create more data. So for example, we'll go over quite a bit about a coin flip, is always the example I need to do. We all know the statistics behind a coin flip. But for example, if we wanted to model that, we would need to flip a coin a bunch. We all can rationally wrap our heads around, it's 50-50 chance of heads or tails. But we need to have a model that can express that. So the same thing when it comes to trading, where we're basically trying to use what's happened in the past and model that into what we think is going to happen kind of in the future. And really it happens whatever kind of trading you do, right? So when we talked about technical analysis, for example, we went through patterns and trends and these type of things. And the reason that we picked on them is because this is what worked in the past. Right? You see this head and shoulders pattern we went on. Well, the reason that people pay attention to that is that there's been a large amount of evidence that says that this pattern kind of over the long run ends up working and doing okay. So all kinds of analysis is going to have some sort of statistical component, right? Because, it wouldn't make any sense to say, okay, well, you need to follow the trend if that hadn't already had some sort of math associated to it, where that's a better way to trade than to sell every time the market goes up or buy every time the market goes down. So basically, the biggest point here is to not worry about the statistics, right? Don't worry about. Then we're going to go into the software, and as we're covering the backtester, because Trade Ideas has the ability to build your own statistical models fairly simply, I'll talk more about statistics there, because I think it'll be easier to kind of show you guys as things go on. So yeah, so statistics when it comes to trading. So what is it that we are looking for when it comes to trading the markets? So this is kind of an export from actually a window within Trade Ideas, which is the backtester, formerly known as the odds maker. And I'm just basic terminology of what we're looking for, right? So the first and the most important thing is win rate, which is over here under total trades, right? So this is the amount of times that a strategy had a winner measured by 1 penny versus a loser measured by -1 penny. We don't know how big all of these winners are just from this number, or how big the losers are, but for this particular strategy, we know that 55% of the time, which is a little bit better than a coin flip, if you take this trading strategy, you have a winner over a loser, right? So that's one part of the equation, and what you'll start to realize is that each individual part of this equation is useless without the rest of it, which is why we have this profit factor number, which I'll go over in a second. The next is your average winner versus your average loser. So this time you win 30 cents and you lose 15 cents, roughly rounded. So now we're getting a bit more of a equation together, where we're saying, okay, this strategy wins 55% of the time, and when I'm right, I make almost twice as much as I'm wrong when I lose, right? So we'll go back to the coin flip. So in the coin flip game, again, if I sat down and said, okay, Marissa, we're going to sit down and we're going to flip a coin. Every time it lands heads, you're going to pay me $2. And every time it lands tails, I'm going to pay you $1, right? In the long run, that's a really good game for me, right? We just need to keep flipping that coin, right? Because even though I only have a 50% chance of being right or a 50% chance of being wrong, the fact that I am making twice as much when I'm right as I'm losing when I'm wrong means that that's a very profitable game, right? You would sit and play that game all day long. And then what's important to note is that what statistics say isn't so much predicting what's going to happen next, right? So because I have a 55% win rate, that doesn't mean that the next trade is necessarily a winner. It doesn't mean it's necessarily a loser. It means over the next 100 trades or the next 1,000 trades, we're hoping to get this win rate. So I want to separate statistics from kind of predictability, right? So again, the goal is to take this law of large numbers, which we'll talk about in a second, and make that work on our side with this kind of small statistical edge. And then both of those numbers together are up here combined in this profit factor. So what Trade Ideas calls profit factor is essentially all of your winners divided by all of your losers in this strategy. So for example, if you took each of these trades and you summed up all the times that you won, and that equaled $100, right? Ignoring the times that you lost, all the times that you won were $200, and then all the times you lost were $100. That's a 2 profit factor. So for every dollar you lose, you make $2. So that's, again, the coin flip example, right? So this strategy is a little bit better than that coin flip game that I just described, where now imagine we sit down and we're going to play the same game. If it's heads, you pay me $2. If it's tails, I pay you $1. But I weight the coin slightly. So, I put some paste or something on it, so it makes it so that it hits heads slightly more often than it hits tails. Well, now I'm making $2 with about a 55% chance, and you're making $1 with about a 45% chance, right? So we end up weighting the coin. So that's basically what we're trying to do with all kinds of trading, but this is kind of the analysis that comes to it when it comes to statistics. So this is just a kind of a shot of this strategy in the backtester. And again, we'll get into this more when we're actually in the platform, but this is how it would look if you ran this particular strategy within Trade Ideas. And the reason it's important to show now the big picture is just these raw numbers alone are not enough, because you can see that this strategy performed really, really well a while ago, probably last month or the month before that. And ever since that, it's been kind of just trailing sideways, right? You're not making anything, you're not losing anything. So if you ran the statistics for just this first bit where we're ramping up, you're going to be doing very well. And then if you just ran it for that second bit, it's not going to look nearly as good. So again, it's important that when you're looking at statistics, you want to look at them through time, right? Because say and again, taking it back to the example, I go to the bathroom and then I come back and all of a sudden, Marissa, you've weighted the coin to your side. So even though I still pay you $1 and you pay me $2, the coin's weighted the other way. So maybe 70% of the time it's landing on your side and 30% of the time it's landing on mine. So that strategy has now changed, right? So this is what we're doing. And, for the people out there who are already trade ideas people, and if you're not, again, links in the description below to buy, to give it a shot. That's what our Holly statistical engine essentially is. It takes strategies like this and using machine learning and artificial intelligence tries to make it so that every time a strategy starts to degrade like this, she tweaks it and changes it for the current market environment. So that's why, again, statistics are so important, because everything we're trying to do is statistically weighted, right? So every time a trader goes to make a decision, they say, okay, what's going to happen if I'm right? What's going to happen if I'm wrong? And what are the probabilities of each? And that's the whole kind of concept of making a trade. If I'm right, I'm going to make 1,000, and I'm wrong, I'm going to lose 100,000, and there's a 50-50 chance of each. I'm not going to do that. If I'm right and I make 1,000, and I'm wrong and I lose $500, and there's a 50-50 chance of each, I'm going to do that, right? So it's modeling these different types of statistics very basically. You don't need to go into all sorts of crazy kind of mathematics from there. But there is some basics that I do want to teach you about statistical analysis. And the first and probably the most important is the law of large numbers, right? So again, slap me if this is getting boring with the coin flip thing, but right now sit and flip a coin 3 times and then tell me what the odds of a coin flip are, right? There is no mathematical way, if you flip a coin 3 times, that you're going to come to the actual results, right? You're either going to get 2 heads and 1 tail, or 2 tails and 1 head, right? Those are the only combinations. So you're going to either tell me that there's a 66% chance you get heads, or there's a 66% chance you get tails, and we know that's wrong, right? So,
What about like if you just get all heads
sorry.
or all tails?
Yeah, in theory, yes.
Okay.
Unlikely, but yes, you could get all heads or all tails. But basically, you're going to be wrong, right? There's just no way, we know 100% if you flip a coin, it's a 50-50 shot. And we know that if you do it 3 times, you're going to be wrong. Odds are, I think you have to get to about 50 coin flips before you actually start to get really close. I think you have to get to 1,000 or 2,000 before you're dead on, but the odds of you getting dead on is very, very small. But anyway, that would mean exactly 500 heads and 500 tails, but I'm nerding out. So essentially what you need to do is you need to think of this in your trading. And a lot of people will do this. They'll say, okay, here is 3 times that I saw that a stock did this and then it went up. Therefore, that's my trading strategy. Well, again, with the law of large numbers, that tells you nothing in comparison to what you actually need to do, which again is going to be the power of trade ideas in the backtester, is you can run up to 6,000 results in a minute. So your goal is to get to those type of results where you're finding out that your strategy is a little bit better than this coin flip just from that law of large numbers. Then the other thing to keep in mind is that you have to trade a large amount of time to get that win rate, right? So for example, again, if going back, if we had a 60% win rate and you took 2 trades, right? You could have 2 losers, you could have 2 winners, or you could have 1 of each, right? So the odds, you can't get to your 60% win rate on 2 trades. And this happens so much in trading, where people will go through and they'll say, this is my trading strategy, I've seen it happen 2 or 3 times, so I'm just going to do it. Or I subscribe to a YouTube channel and the guy told me to do it, so I'm going to do it. And what will happen is they'll go trade it 2 or 3 times, and as soon as they hit a losing streak of a few trades, they'll jump ship and they'll be on a different YouTube channel. They'll be trying something completely different. And generally that's happening because they're not letting the statistics play out. That guy on the YouTube channel might have been 100% right and may have given you a wicked trading strategy. But the fact that you weren't able to stick with it long enough, then it's going to be the problem. Again, back to the coin flip. If we sit and we play this game where I pay you $1 and you pay me $2, and I come to the game with $10, there is a chance, a small chance, that I could wipe out all my money and walk away, even though in the long run it's a very good game, right? So if I have $10 in my pocket and you ask me to play this game for, say, listen, if it hits heads, I'm going to pay you $20, and if it hits tails, I'm going to pay you $10. That's not a good game, even though over the long run it's profitable, right? Because one loss and I'm out. Two losses, if I win the first one and then I lose a couple, then I'm out, right? So you have to let this law of large numbers work, and the way you do that is by trading so small that you can withstand these streaks, because what we're doing is essentially trying to weight the coin, but it's still probabilistic in nature. So there's days that Holly doesn't do well. There's probably been a week or two in a row where Holly didn't do well. And over the long run, we all know that Holly has done fantastically. But people who don't understand this concept of this law of large numbers can end up getting in a lot of trouble because they've kind of killed themselves before they got to the chance of it turning around. And what happens quite often, just because of the way luck works with humans, is that will be, they'll blow up, and then the next day is when whatever strategy they wanted to do starts performing the way it should, right? So again, this is, when it comes to statistics, this is what I want you to think of, is the fact that when you're sitting down and you're going to take a trade, the thought shouldn't be, how is this trade going to work out? That's an irrelevant thought, because there's some randomness to what you're going to do. What you need to sit down and think, if I were to do this 1,000 times, what would be the outcome? And your hope is that at least 500 or more are going to be winning trades. And then the rest is managed by that risk reward principle, where you're saying, okay, I can take 100 trades in a row going against me, so that when I have 100 trades in a row going for me, it makes double the money that I lost, right? So again, it's a two-sided thing, where it's how often are you right, and what happens when you're right versus what happens when you're wrong. And I hope this is making sense to everyone, because this is...
I have a question.
Yep.
Are you saying that traders need to stick with the same strategy? Because I can see how some people would either run out of money, or if it's not working for them after a few times, they want to change to something else. But you're saying in order to test that strategy over a long period of time, you have to stick with it, right?
Right.
Is that what you're saying?
Yeah, because if I were to say, hey, Marissa, I've got this strategy, 90% of the time it wins. 90%. Huge chance. There's certainly a chance that the first 3 or 4 trades you take are all losers. It doesn't mean, and in this case we're assuming I'm an honest person, and I've done the math and I'm presenting you something that's actually 90% correct. If you were about to cross the street and I said, Marissa, there's 90% chance you're making it to the other side of the street, right? That's not safe. Like if the plane was about to take off and the announcer's on and he says there's a 90% chance that we're landing, and then there's 10% chance we're going to fall in the ocean, right? You're not going to be feel super safe about that, because that's still a 1 in 10 shot that the plane crashes, right? That's not good. So in the trading world, a 90% winning trading strategy is absurd, and if someone tells you they have that, run, right? It doesn't happen that way. So what you need to understand is, okay, if Mike is giving me a 90% trading strategy, I know that there's a 10% chance on every trade that trade's a loser. So I need to make sure that I position myself correctly, and this comes down to you saying the people losing all the money, that I position myself correctly, that if this losing streak occurs, I'm fine, right? If I just have really bad luck and this is a really good trading strategy, if this occurs, I'll still be okay, right? That's what you have to do. So I'm saying you have to manage your expectations based off of what it is. So now when we're talking about like a 60% winner, you have to be kind of real careful, because 4 out of every 10 trades you're going to lose. And this is why after we go through the platform, we're going to go through risk management in great detail, because it really is kind of the be-all and end-all, I think, of trading. And it's something that we do really well with our automated trading.
So do you typically, when you trade, do you trade with just like one or two strategies, or do you have like a bunch of different ones and like you just switch up on it? Like, how does that work for
I
you?
have a bunch. I have about 4 to 8 that I run consistently, and then I also use Holly. So I look at Holly as well, just because I know the statistics are in my favor. So what your job as a trader is going to be is to take something that has a statistical base that you know, okay, there's a good chance, 60% plus, that this trade is going to work out, and then use your eye and the technical analysis and the fundamental analysis that we went over and try to up that to 70, 75, right? Try to crank that up a little bit, understanding that even at a 75% chance, that's 2.5 to 3 out of every 10 trades are going to lose. And the other fallacy that people have to get over, that's really, really complicated for just, I think, human brains to grasp, is a lot of people think, okay, I've got a 90% win rate, right? I flip the coin or I put on the trade and that lost. Well, okay, well, the next one has to work, right? And they think that probabilities are summarized, right? But each one is a unique circumstance, right? Each time we flip that coin, it is a 50-50 chance. Regardless, I could have gotten 10 or 15 heads in a row. A lot of people will think, well, that's going to increase the chance that a tails is going to come up. Not the way it works, right? Every situation is unique, right? So just because you've been on a losing streak, what will happen is a lot of people will start to trade bigger or put more money on the line because they're like, okay, well, I've lost so much, I've got to be out of bad luck. Let me really hit it this time. And you got to understand that every single trade is going to have the same odds when you get it from some sort of statistical system. And again, you've got to position yourself accordingly.
So I have a question. Jumping on those, how long would you advise to hold on to the same strategy?
We're going to go over that a lot when we start running our back tests, but the main thing is that you want to go into the strategy and see. So for example, I don't know if I captured it in that picture. Yeah, it'd be really, really hard. So this strategy, you guys probably can't see that, but basically Trade Idea says that this particular strategy, the most losing days in a row were 2, and the most winning days in a row were 4. So what I do is I go through and I look at how often the strategy has lost days in a row, and then I will go through and say, okay, well, if it usually will have 2 or 3 losing days in a row, when we get about double that amount, I'm going to go back and I'm going to try to see what's going on, right? So then becomes, and again, we'll get into this when we do a lot of the back testing, we're not going to be solely statistical traders. So then you're going to use your human eye. So for example, if this strategy was looking to short, so it was betting that the market was going to go down, and it usually only loses 2 days in a row, but you're on your 4th losing day in a row. If you go look at the market and the market was just straight up 4 days in a row, well, then you might say, okay, that's fine. My strategy is probably still good. It's just the market was against me. Let me continue to trade this strategy. Where if the market was down 4 days in a row and you still lost money on your shorts, then you might go investigate further. You know what I mean? So it's basically looking at, what does the strategy normally do? Is it doing outside of what it normally does? And is there a reason that I can find and I can kind of pinpoint to make a change? So this is where kind of the art and the science mix, right? Because if trading was a pure science, then we would just turn on Holly and walk away and that's it. We'd all be millionaires and we wouldn't need to do anything, right? So there's this kind of duality of it, right? Where we have to say, okay, the statistics aren't working right now. Is there something going on in the market? Do I just have to weather this storm, or is there something that's fundamentally changed with this strategy? And this is just talking about Holly. So this is a trade that Holly put on today. So I just grabbed a screenshot of it. And this is kind of where I'm going to get you guys started, is because all of these trades that go through Holly have a statistical edge built in. I've built a lot of the strategies myself that go into them, and then it gets refined and optimized by the artificial intelligence each night. So that, that strategy drifting that's what we're hoping to relinquish, right? So, oh, I thought I did more than this. I thought this was prettier. Sorry for the ugly slide. So this is kind of, it's supposed to say like a checklist of what you should be thinking about. Because again, just some housekeeping. I am away in New York next week, so I won't be here for this. And then the week after, maybe, I'm moving, so it depends on the internet being hooked up and all that kind of stuff. So you've got some time to think. So this is kind of what I wanted to give you guys to think about. So first is the statistics, right? Are the odds on your side, right? Right now, you guys don't know how to backtest or anything. That's fine. So I just want you to do it by eye, right? Just go through the market and try to determine, okay, this pattern or this indicator, or all the things that we've talked about with technical analysis. And if there's something that really kind of speaks to you, and something that you can go through and you can see a lot of, like a double bottom or a head and shoulders pattern, or the two timing bastard that I told you guys about, one of these patterns, if any of these kind of make sense to you. And then, right, and this is kind of something I'll send to you guys so you can have a little checklist. Then it comes to the fundamental data, right? Is there any news or earnings coming up, which we talked about last week, I believe, right? What's the volume? What's the short interest? These type of fundamental style indicators. And then into your technicals, right? So what is the trend, right? We talked about what trend is and why that's important to be trading with it. Are you trading with the overall trend? What's your indicators say, if you're using indicators? If you're not, don't worry about that. What's the pattern, right? And then what's the candlestick pattern? So you can see that basically everything we've learned to date, after kind of just how exchanges work and everything, is all kind of leading up to this trading plan, where you're going to sit down and you're going to go through your charts, or you're going to go through your scans with trade ideas, and you're going to find, okay, so first I'm starting with the statistics. I'm going to get a scan, and I'm going to run it, and I'm going to make sure the statistics are on my side, and then I'm going to watch that scan. And when it comes up, these are the things I'm going to check for. What is the news? Is there earnings tomorrow? If so, I probably don't want to trade it. Is there enough volume? If not, I probably don't want to trade it. All of these things, down to the trend, the indicator, and then last, the candlestick pattern. Is the actual candlestick pattern something that I'm interested in as well? And then I want you just to build completely meaningless but mock trading plans, which would just say, I would enter here, I would get stopped out. So if I'm wrong and it comes down to this point, I'm out, and I'm going to take profits here. And then start to see, okay, did you establish at least that 2-to-1 risk reward that we talked about, where you want to make twice as much when you're right as when you lose when you're wrong? And then how are these working out kind of statistically down the line? Start to track, okay, I did 3 trades and 2 of them were winners, right? We know that's a very small amount. It doesn't really matter, but just get the brain around kind of a statistical type of mindset. And then the rest of this is just our Facebook. Again, you guys got to get some social media stuff and send them to me. Discount code and a link, and just my YouTube and Twitter and all that if you want to find me. So that went longer than I thought, but that's kind of a basic view of statistics. Again, Trade Ideas has a whole back testing system where you'll be able to take any scan you want and see how the statistics are. So when we get to that part of showing you trade ideas, we're going to dive kind of really deep into that, and I'll start talking more about, probabilistic outcomes and all that kind of stuff. But I just wanted to get you guys thinking in a statistical way, just because as a trader, that's how you have to think. So many people are out there and they're worried about what the next trade is, and you'll start to realize you become a professional and you become a good trader when you don't really care about what the next trade is, but what the next 1,000 trades are. Because if you're doing it right, you're going to be in the game long enough that you can take 1,000 trades, and really that's kind of what matters in the end. So good questions this week. Any other questions before we go? But I do like the feedback. I've looked up at the chat here. I don't see any questions here. There's my YouTube and my Twitter, so you can hit me up there if you have any questions, and we can go over those. So, all right, guys, I am going to take off for the evening. Again, next week we won't be doing this, and just keep an eye on Twitter for the following week just to see if I'm back and have internet and power or not. Okay, one wave.